Yellow Tunnel. My name is Dr. Pell. I'm the founder of Yellow Tunnel, and today we're going to talk about current market conditions, right? AI scare last week. This week we have the war in Iran and oil prices going higher. VIX approached 28, 29. We're sitting on the major support levels, right? So the question is, how long will this uncertainty last, and how to take advantage of the current market conditions. All right, Anthony, you can hear me perfect. Okay, with the sound. What about? Well, you should be able to see me. You should be able to see my screen as well. Hopefully, you guys can see both. For those of you who are new, welcome. I see a lot of new names. I appreciate that. Very thankful, especially if this is your first broadcast and you're from bar chart. Welcome, welcome. Appreciate your time. For those of you who are new, my background is in technology. I was a CTO and executive in several startups here in Chicago, in broker-dealer space, hedge fund space. First one was Options Express. That was 20 years ago, more than 20 years ago, 25 years ago. That's why I started my career, was the first employed Options Express. The company went public. I decided to manage my own money. Since then, I work as a consultant and investor in several fintech companies here in Chicago, hedge funds. Started TradeSpoon and Yellow Tunnel 12 years ago now, because I kind of learned how to build technology in all the experience and how to assemble a team of financial engineers to build software, AI, based on AI, latest advances in AI, to find signals in the market. So I've been doing that for, well, since Options Express days, now 25 years. Keith Harwood joined me 2 years ago from Options Hotline. He brings a lot of experience from trading. He was a market maker on the floor. He has deep knowledge of credit markets, deep knowledge of derivatives market, and he's also doing help manage live trading rooms. So he manages live trading room. He does one-on-one consultations to help you with your trading plan or how to navigate current market volatility if you want one-on-one consultation. So that's about us. Disclosures are very important. If this is the first time you see the slide, I encourage you. Mr. Lilsim, thank you. Thank you for being here. I appreciate this. Disclosures are important, especially if you haven't seen our disclosures. Very important to look at optionscreening.com to understand the risk and suitability associated with trading stock and options. I'm going to go through live trades, live ideas, how to hedge your portfolio. So it's very important to read the disclosures and understand that I'm not a financial advisor. I don't manage individual accounts. I'm here to show you what I do in my own account, based on my own risk tolerance level for general education and information purposes only. Before we jump into trading psychology, let's talk about current market conditions, right? What's going on in the market? Let's see what the model says. So the model, aggressive power traders are one of our main models. It's a short-term model. We also have a longer-term model for weekly power trader. Basically runs every day, provides signals in the market, which stocks to buy, right, which could outperform. So today it sees Arch Daniel Midland, right, some of the commodities, agricultural products, energy, accidental petroleum, and aerospace and defense are in a strong uptrend. And it shows you potentially where do you want to buy and where do you want to sell these stocks, right? So if it drops to 734, then this is probably a buy area. 780, probably overbought, and you want to trim NOC position. For spiders, it sees 679 support. We got to 677, probably lower, 675. And overhead resistance 692 in the next 10 days. It doesn't see, in the next 30 days, it doesn't see a new highs. It sees pullback potentially to 670 area or below, and only in the next couple of months does it see a breakout. Model is trained on the data. We only have, yesterday, basically 1 day of the sell-off. The data is as of close of business yesterday. So we have one day of the pullback. It doesn't know about today's pullback, but going into the pullback, It basically says don't expect new highs in the next 30 to 60 days. On the lower side, 670, 660, 670, 675 is what you can expect on spiders. And if you look at the spiders today, we see this. We were as low as 670, exactly at 670. Now we're off the session lows. We're actually at session high at 680 level. At 680 level. So right now, SPX is fighting for the 6,800, right? SPX and spiders are highly correlated, but a little bit different. You just multiply by 10. If you multiply by 10, it's 6,784. We're at 6,799 on SPX. So very important level on SPX. We were as low as 6,700, and we're now trading at 6,800, right? Pretty large moves. And if you look at the retracement in SPX, so we were at 6,700 this morning, and we're at 6,800 right now. And those are the main support and resistance levels now, right? So 6,700 on the upside, on the downside, and on the upside, yesterday we were at 6,900, right? And for those of you who are bar chart users, right, and if you attend our live trading room, it's very important to look at the positioning data, right? Look at positioning data to see where the support and resistance levels are currently. And if you look at the gamma exposure from bar chart, you can find them under quotes section of the bar chart site as soon as it loads. While it's loading, let's just look at the interest rates. So 10-year yield. 10-year yield yesterday was as low as 395. So we were testing very important. And I'm more of a, if you've been in my webinars, I'm more of a top to bottom approach. I look at the macro, right? Earnings are less important right now than, bond market and then currency market. So if you look at the interest rates yesterday, everybody was afraid of recession, right? And interest rates dropped going into the war this weekend to 3.95 because of the credit dislocation, right? Private credit, all the companies that were exposed to private credit, like Blackstone Group, right, started to have a sharp pullback. All right, you see Blackstone Group, even JP Morgan, that doesn't have a lot of exposure to private credit, but had a sharp pullback, sitting at the July lows. And just in general, if you look at XLF, right, banks, major banks, Berkshire Hathaway, you have a sharp pullback to testing June lows, right, 6 months lows, 8 months lows, and regional banks, right? So that concern about exposure to private credit, similar that we had in 2023 when regional banks, some of the regional banks went under, right? That scare got translated now into the regional banks and major banks, even before the war in the Middle East with Iran, an escalation in the Middle East. When the war started over the weekend, crude oil got to 78, right? Crude oil is at 80 level. And the idea is that the longer the conflict lasts, the longer the uncertainty lasts, the higher the oil prices. And the higher the oil prices, and this is why right now the initial reaction for this week, higher rates. I mean, it was oversold. We were sitting at March lows. Actually, you can look at the almost November lows of 2024 in terms of interest rates on the concern of recession due to the private credit and exposure to private credit, and maybe the contagion spreads to regional banks or private equity firms that have exposure to private credit. And now we're bouncing back from these levels, because if the crude oil is going to 100 and the escalation in the Middle East lasts not days but weeks, then the yield is bouncing back. And no new signals, that's the good news. But if 10-year gets to 460, 480, or if interest rates drop below 360, I would say that's the area of concern, right? This is a fear of recession. and people are going to be concerned with the, not a good word, recession, right? And if we make 2025 highs, which was somewhere between 460, 480, right, then people are going to be concerned about hyperinflation. I mean, obviously, we're in the middle of the midterm elections, right? A lot of voters will form their opinion by May, June, right? So it is important not to have hyperinflation for the new government, well, not new, for the current administration. I keep saying new governments. For the current administration, it's very important not to have hyperinflation if they want to, have a chance to hold on to the Senate and the House. And it's also important not to have, spikes in unemployment, which we're going to have employment data on Friday. Employment has been stable, inflation has been stable, but obviously uncertainty with the Middle East escalation and people dying every day definitely is going to be on the mind of the investors and not investors, but people who vote, and will determine the outcome of midterm election. So very important to keep an eye on interest rates. So far, I would say no new signal, which is probably the best news for the bulls, right? And it actually looks like a descending triangle, right? Where 70% of the time, descending triangle, you break to the downside, especially with the new Fed chair who's going to come in May. There's uncertainty about policy, so you could have a drop 70% of the time to the downside, or it could be a false breakout, right? You have exogenous shock like war in Middle East, and then 30% you trade to the upside. So something you want to keep an eye on. You also want to keep an eye on dollar, right? Trade away from United States. That was the theme since Big Beautiful Bill was introduced in April, March of last year. You can see sharp pullback in the dollar, and it got to the 95, 96 level. And today people are looking for safety, right? They're looking for safety, and they're gravitating toward dollar, right? And the stronger the dollar, the recent trade, small caps and Germany, right? And Europe in general, or trading outside of the United States, like emerging market, they're down sharply, right? They're down sharply because people are going into a dollar, right? And it's a global uncertainty goes outside of the United States. And we're back to the normal correlations where in a time of uncertainty, people are buying dollar, right? They're buying treasuries, right? You have TLT going higher today. Well, actually, it's going lower because of the inflation, but it did spike, treasury spikes, and gold, right? And gold is also under pressure today, probably because of the dollar, right? So gold is also, silver, gold miners are sharply down as well. All right, the request could not be satisfied. Okay, let's try it again. All right, looks like bar chart has issues. Let them work on their cloud. But what I did want to show, if you look at today's live trading room and SPX, so very important level that I'm watching. So 6,900, yesterday's high. This has been overhead resistance back in October, November, December. I mean, as long as we are below 6,900, bears are in control, at least short term. We have a new low today, 6,700. And if you look at the open interest, right? If you pull up open interest, you will see that this is where majority of high open interest is, right? And you can go here. Let's look at let's look at our friends at Vanguard. Well, we lost. All right, so if I go to the spiders, And most of the option contracts are in the March expiration. So if you look at the March expiration and you look at the open interest, so you have very large positioning at 680, right? 14,000 contracts. Then you have 40,000 at 685. And then if you go, let's widen this range to 650 to 700. If I look at the 700 strike, right, you have a very large positioning at 7,000, right? So 700, 7,000, very large position. The next one was 6,900, very large position, right? 35,000, and now we are trading at 680. So 680 is 14,000, not that much actually. More is 685. So 40,000 at 685. And then you have the next level is 670, 20,000 contracts. And then on the put side, 80,000. So you have 80,000 now open interest on the put side. So 670 is becoming a very important level. And 52,000 open interest on the put side at 680. So those are your main support and resistance levels. And below that, the next high level is now 660. And probably 650 is also people buying. 653, you know, very heavy volume in the 650, 670, because people are concerned that the current lows, we were at 670 today, the low 670, that the current lows will not hold, right, will not hold. A lot of it will depend, again, on the perception of how long the conflict will last, right? So today we went to Grok. Let's see if it's still saved, and basically ask the question: what is the probability of you know, conflict lasting weeks versus days? And let's see if that was saved. Yeah. So I asked, based on betting markets, what is the probability of war with Iran to last only several days? Right. Ceasefire by March 16 is 4 to 15%, but rising. Right, and that's probably why you actually see a rebound. You know, SPX is only down 1% now, and by March 15, you know, 30%. 4 weeks or April 30, 8 weeks, crude oil could be actually at 100 level. So the current support levels that I outlined on SPX will probably not hold if we actually have to wait, you know, 8 weeks. I would argue even if we have wait 4 weeks, the current levels will not hold, right? Which is 61% probability that they will reach ceasefire only in the next 4 weeks, right? And in the next 4 or 5 days, very low, rising but low, right? So the point is, and let's see if there's a change. This was this morning based on betting markets. What is the probability of war with Iran? Last only several days. Let's run this analysis again, and let's see if, you know, in the next couple of days if that probability is rising. Ceasefire by March 6th. So 2 weeks, 20 to 32%, and only 4% till, you know, end of the week. And for the week, so as long as the at least 50% probability that it's going to last few weeks, that means it makes sense to hedge, right? And as these odds change based on the news, right, based on the Truth Social and current administration tweets, what do they think is going to be a couple of days? Do they think it's going to be a couple of weeks? And based on what majority of the people think, the equilibrium between bulls and bears will shift. Right now, looks like we're off the session lows. We're actually at session high, and we're facing 68.20. I would watch 68.20. If we can close above 68.20 today, basically hold the current level, that's a win for the bulls. Most likely, there is some indication that we are negotiating with Iran, and, you know, and we're getting close. You can look at the crude oil. I mean, we reached new highs. We were at 78 on crude oil. We're at 75, so it's still elevated. So, you know, it's probably not over, and this is just people are buying on the pullback. VIX did go from 28 to 23. So we're, you know, not out of the woods. I mean, you need to pull back to 20, but still VIX is off the session high. So right now there's some indication that maybe we are gonna start negotiating with Iran. And if that perception goes away, then VIX is gonna be back to November, October highs, right? So I would watch VIX. You know, we're getting to overbought levels, right? These are the highs from, you know, back to, I mean, only during Liberation Day, VIX was at 60. But we are basically testing the same levels we tested in October. How do we help on yellow tunnel? Again, we have a model, aggressive power trader. A lot of you subscribe to aggressive power trader. We have today, you know, aerospace and defense looks strong. Energy names like Occidental Petroleum, oil drillers look strong, and some of the chemical, you know, commodities, not all, but ADM looks like in uptrend, right? Actually down today 2%, but still in strong price action. Yesterday was CEF. Let's see. Yeah, CEF. In strong uptrend, right, continues to grind higher, so we have a strong uptrend in CF. So not everything is being sold off indiscriminately, and aggressive power trader basically tells you what the trends are, long-term trends, 1 month, 2 months, 3 months, and what are the key supports, right? 679 is your key support, 692 is overhead resistance. And then different signals. The signals are meant to last only a couple days, right? It's very sensitive to short-term trading and movements. And the idea is to only have 4 active positions at a time with 2.5% of the account value per position. A weekly power trader is a longer-term model. I know a lot of you sign up for weekly power trader. It gets updated on Sundays. It looks for longer-term trends. The idea is to hold it for a few weeks, maybe even a month positions. And you can see going into the event Costco's of the world, AME, CF. Right, so you see Costco, people are hiding in Costco and some of the consumer staples, and Costco is actually up today, so that's something to consider to diversify your portfolio. We already talked about CF, and I haven't forgot what AME is, but I did like the chart. Let's see if it's still holding up. Yeah, and no, that's agricultural. Let's see, AME, electrical products. So producer manufacturing again. MTech, not sure exactly why, but I mean, it did pull back today, but it still shows a very strong uptrend. So that's longer-term model, longer-term momentum stocks, and that's weekly power trader. If you want to see what I trade, then you can go to Dynamic Power Trader. Dynamic Power Trader, these are my some of the positions that I have: CF, CAR, FRT, Halliburton, and you can also enter your phone number and you will get SMS messages. So today, Halliburton, right? I'm trying to close Halliburton. So it's an option trades. I initiated Norse Group Grumman Corporation, bought the stock. So it's a combination of stock and option trades. I bought QQQ put spread, right, to hedge portfolio because I'm concerned that if we don't reach an agreement in the next few days, it actually takes a few weeks to reach an agreement with Iran, and the Strait of Hormuz is closed, right? There's no access to Arabian Sea, and Iraq already kind of shutting down their oil production. Iran is going to have to shut down their oil production. Oil prices will continue to go higher, right? The longer we wait, the longer it's going to take to resolve these uncertainties. So I did put QQQ put spread. I closed it last week. I reopened it again, and actually today put a hedge on some of the other positions like CAR. Right, you can see large open interest at 60. If CAR does not hold and it's a stock position, then I want to be hedged. Right, so I did put a 60-65 spread in case you have another, 5-10% pullback in the market. Right, so I'm going through my stock positions and trying to hedge them either by buying put spread on individual stocks or buying put spread on the QQQ itself and trying to diversify, right? I have also T-Mobile position. So telecommunication that pays you dividend, it's been a strong uptrend, and T-Mobile is actually up today, right? So you don't want to have high concentration in any specific sector, especially momentum stocks or high beta stocks that do get sold off together, right? You might think, what's the relationship between Blackstone Group and Regional Bank and Palantir, right? But the relationship, they're all high beta momentum stocks. They all have perception, at least, that there's AI exposure, and you can see stocks like Palantir looks like they're stabilizing, but still not making new lows, but extremely oversold, right? Whether it's a Palantir, Microsoft, I think is catching a bit today. So you can see they're oversold and they are actually up on a down day. So maybe there is no more sellers left in some of these AI names, but it is being translated into other sectors. So that's dynamic power trader. Right, combination of stock and option trade. You get email, you get SMS message every time I trade. You can look at my position, you can look at my orders, enter phone number. We have an AI analysis, right? You can type in a signal like Apple or Microsoft, right? If you want to see, okay, I don't have positioned at lot trades, but I want to analyze Microsoft. So we'll tell you again, 597, you might want to consider buying Microsoft. 613, you might want to consider selling Microsoft, all right? Sorry, Microsoft. But that would be the setup for Microsoft, not sure. Let's do NVIDIA. Yeah, NVIDIA, sorry. So 182, 189, right, for NVIDIA. So at 180, maybe it makes sense to start buying NVIDIA, and 189, where you want to trim. And the trend is that in the next 3 months, it could be a $200 stock, right? You can watch the recordings, right? All of our live trading room recordings are here. You can also look at the different webinars and different topic, technical analysis, option trading, portfolio management. There's 15 years now, or 14 years worth of webinars that you can analyze. We also have earnings power trader that we have position, today, this week we have Marvell, Alibaba announcing earnings. I'm going to utilize the elevated volatility in some of these names using options, right? So, and the idea is that VIX is elevated, so it makes sense to sell maybe some premium on these stocks because expectations are very high that they're going to move. So that's Marvell, Alibaba, earnings power trader. And if you're just interested in stock trading, then Profit Accelerator. Any questions? Alex, Andreas, Anthony, Anoop, Bob, Chevrolet, David, Douglas, Ernie, George, Julie, Larry, Mr. Liza, Peter, Raj, Ron. All right, we have a lot of people. I appreciate it. So 2 things I would want you to consider. One is use this. First of all, open up an account on Yellow Tunnel if you already don't have it, right? If you don't remember the password, or didn't set up a password, you can always go in here and just say, forgot my password, or register as a brand new user if you don't have an account and just forgot password. And then in the contact us, you can go and schedule consultation. I'll drop that in the questions. Inside of the questions, you can see it on all. This is an opportunity to spend 25 minutes with Keith. It's for free, and he can help you look at your portfolio, look how much exposure you have in your portfolio, and what is the most effective ways to hedge. Is it selling calls or get a cover call? Is it buying put spread? Is it buying single put? Just depends on how much money you manage and how much experience you have, or does it make sense to buy inverse ETFs? So schedule a consultation with Keith and he can help you sign up. We also have a relationship with Avantgarde. You've seen the platform that we just released. I'm actually pretty proud of that. We have marketing relationship with Avantgarde. which you can also use to trade, right? And look at this AI analysis and some of the other. So I'm going to send this offer as well. If you look into auto execute, or you need broker assisted trade, or you just need another broker to help you segregate some of the strategies, maybe earnings you want to do in Vanguard, but in Schwab you want to manage your 401k, right? For every strategy you want to have a separate account so you can actually see the performance. Part of the trading plan, you want to know how much your portfolio is growing. So then I would consider that offer as well. So I put it inside of the questions. So, and here you get 3 months free of Yellow Tunnel. If you sign up for Yellow Tunnel, we will send us an email. We'll refund you the 3 months worth of payments for any Yellow Tunnel services, and as long as you sign up for Vanguard trading, and fun. It's commission free, right? They waive in the subscription fee, and you have an opportunity to talk to broker, every time you're trading, right? Every time you're trading, you have an opportunity to talk to a broker, which a lot of companies don't offer anymore. So that's all I have for today. I appreciate everybody attending. Alex, Andreas, Anthony, Anu, Bob, Shirley, David, Douglas, Ernie, George, Joe, Julie, Larry, Peter, Roger, Ram. Thank you very much. Take advantage of both of these orders. Talk to Keith by going to contact us. See if this offer makes sense to you. We do have marketing relationship with Vanguard, full disclosure. And I hope to see you same time, same place next Tuesday. And hopefully, we're all going to pray that the war is over, that the people stop dying, and there is a peaceful resolution to this tragic war. All right, thank you very much, and have a great day. Joe, thank you. Everybody, thanks a lot. Appreciate you guys attending.